and welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay coming to you on a VIX expiration Wednesday where the settlement was 20 spot 11. Not able to break that 20 spot, but on the low end of the range to be sure, as the S&P 500 yesterday closed above 4,300, marking a 17% rally off of the low. The market's been loving these low interest rates lately. They've been loving this idea that the Fed can be less hawkish as inflation expectations are lower, and we still have a decent enough economy, especially when you consider the jobs market, and the market of course is enjoying lower gas prices. So that's been the narrative for the rally, and it still remains to be seen whether or not this is a dead cat bounce bear market rally or if it is the real deal. Now the bulls have a big feather in their cap. They took over that 50% retracement that historically has been a very good sign for bear market rallies. And they also, like I mentioned, have the Fed and gas prices working for their favor. Now, we are going to get some Fed speak today. Today, the narrative might be shifting. We're starting to see interest rates peak back up. And for the bulls, their case is, okay, it's great that gas prices are lower. It's great that maybe inflation has peaked. But I've got news for you. Yes, 9% inflation is terrible. 6% inflation, that is still way too high. That has to get down to 2%. So the Fed might still have some work to do, and they might need to wake the market up to those expectations given the recent moves in interest rates. So we'll see how that plays out. We'll watch it. And then, of course, this strong jobs market, it's good for a lot of reasons, but for the inflation reason, it still could be a thorn in the side for inflation concerns. We have a lot of job openings. We have not a lot of people looking for work. Higher wages is unfortunately inflationary, so we're going to have to watch and see what the Fed does with that. For Equity Armor Investments, I'm Joe Tigay.